Hello YouTube. So this is the most important video you need to understand. This is the game changing video. So I've covered a lot of things. We have from probabilities, how we are going to cover the day trading aspect, everything. We have done that, but this is something that I think will be a game changer to you. So the thing that I want to say is that when it comes to risk, we are talking about risk today. Risking, how much you are risking. This is where the money is made and where money is lost. You risk this, you get this. Are you profitable? Do you make money at the end of it all? So we are going to dive into that. So when it comes to risk, the conventional way when you come into this industry, you are taught from the baby peeps guys to everyone else, is that when it comes to risk, you should risk like 1 to 2% of your account, or less than even, or 5 or even 5% if you are aggressive. But yeah, me personally, I don't do that. I don't like risk that. I think that is so unpredictable, and risk is the only thing you can be able to predict and control in the markets. You know, the amount of lot size you are opening there, where you're placing your stop loss, and where you are like placing your take profits, those are the only thing you can like manage and control. Those are things in your control. You know, in life there are many things that you cannot control, but you know, you just have to adapt. One of them is like where the market goes, or the market overall. You can never predict where it's going, but something that you can is the money that you are risking there. You have the power and you have the potential of controlling that. So personally, I see like risking 1 or 2% is like doing a disservice. And also, like when you're in a losing streak, it amplifies your losing streak, because you see the balance change massively. And also, like, you can see, I don't know what's in my eye, it's bugging me, but you can also see like the drawdowns, and it can now affect your psychology, seeing a string of losses. But now what I want to talk about is different risk management styles. People don't talk about this in this industry, and I think I'm the one of the first people to do this. And so, as I'm going to say this, you don't have to have the conventional way. For me, I use unconventional way, especially now we are risking $1 to get half a dollar to less. Okay, so for me now, you know that by doing that, your win rate is so high and your loss rate is so low. So remember I told you about like consecutive losses in the video of probabilities. If you have not seen it, I think it will pop up at the screen, or just go back to the series and search for probabilities. So I talked about probabilities. What you are going to be betting on is consecutive losses. So the great thing about the market, it's in a trend. Okay, the market moves like a river. Okay, it flows, goes up, down, down, but it has a start, but we don't know where it's going to stop. But every Monday to Friday, the river continue flowing. It keeps on flowing. It goes down, it goes up. You know, the trends keep on flowing, on going. So we can take advantage of that too, that we can control our risk, and the market moves in a trend. Okay, the market never stops, and the market moves in a trend. So I'll cover next, after this video, we're going to go over a video on consistency. So that will be able help like everyone understand what I'm trying to say, and reframe it. Okay, and reframe it. So if you remember the chart on the probabilities of consecutive losses, so what you are going to be doing, we are going to be betting on the number of consecutive losses that cannot appear. So this is for the conservative people. Before I'll cover the aggressive, but first I think this will require two long videos, because this is a very detailed like subject. So I'm finding in my mobile phone, I'm trying to search for the consecutive. Okay, I found the chart. Okay, so now, like we saw on a 66% win rate, that is risking $1 to exit with half a dollar. We saw that you can have the maximum is like 9 consecutive losses, but that's too high. Let's just start with the basic. Let's say you are risking $1 to get out with 10 cents. So to break even, you need a strategy that has the you are going to have like a 90% win rate. Okay, if you have 90% without calculating your edge, you are at break even. So the maximum you can have is 4. Okay, so and the chances of 4 is less than 1%, it's half of a percent. So let's say 5. So what you can do with here is you can just decide to use various risk management techniques and strategies to be able to like make money, while knowing that the chances of you blowing an account is close to zero. So this is for the conservative. I'll show you how to go aggressive, but also let me just simplify. To go aggressive is betting on the one with the 4.5, which is 3, that you are betting that this in 50 trades there is a 4.7% chance of a trade like having 3 consecutive losses when you're risking $1 and exiting at 10 cents. Okay, I hope that is clear. So let's go over first the different risk management strategies that I'm talking about. So the first one we have is the most common one. We're going to start with the martingale. Martingale is where you like double your trade or your amount capital size after a loss. So every time you lose, you can back it up by having 4. Okay, so every one you lose, you go like you double it till you recover your losses. So that is one. So there are ways, but this one I will not teach on YouTube, but just know this free knowledge, you can just craft it out. Here it comes to back to creativity. You have to be creative. This is the creative aspect of your mind, that you should play around with these ideas, find something that works for you, because I can tell you this, but I don't know what is comfortable to you. Maybe you are comfortable with risking $1 to get 50 cents. Maybe you're comfortable with risking $1 to get 5 cents. So it's up to you to decide and to build something that works for you. So the first one is martingale. So personally, me, I've used martingale and it has helped me like get 9 payouts. Me, even prop farms, I usually like go for those ones that have like allow risk, you to play around with your risk. So I'll also cover videos on how to use this system on prop farm. So the first one is martingale. So the flow with martingale is, once you like, you know, when you come to this market, you are told to go for high risk to rewards, maybe $1 to get like, you know, $2. Okay, the problem is that you have seen the number of consecutive losses that you can be hit while risking that much, because that one you saw that the win rate is like 33% for you to be break even. 66% you are losing. So you can have even 10 consecutive losses. My friend, even if you're trading that martingale, the amount of capital you'll need to do that will be so huge and astronomous. And also like you're not sure on where the zero is. You know, like when you're risking with this, like when you're using the risking like $1 to get less than half $1, you can now, even on the chart, you can see where the 0.00 is. So you know the maximum consecutive losses that you can be able to encounter. So what you are betting on is the number of consecutive losses that you can face. So that is something I need like to clarify. So after that, the first one is the martingale. The second one is called reverse martingale. So as the name suggests, this one you double every time you win. So if you win a trade, because the win rates in these strategies are huge. I've never tried out reverse, but you can try it out. I'm just putting it out there. I'll leave a link to this article so that you can be able to read and understand it more and be able to be creative and create something that works for you. So we have the reverse martingale. This is why you double every time you win. So what you can do, since you have a strategy with a high win rate, you can double every time you win, but you have a maximum cap. Like you say, the maximum, now here you're betting on the consecutive wins. Maybe you know that this strategy can have 2 consecutive wins, so you can bet the first one, the second one, and then when you reach the third one, you return back to the original stake. Okay, so that is one way you can be using to like make money in these markets. And you will see that since your strategy strike rate is so high, you are going to be profitable at the end of the day. So it's about what works for you. So you can even create a hybrid where you have this reverse martingale, which I think is called the paroli, because the person who invented it, I think is called paroli, and it's also the martingale. So you can make a hybrid. It's up to you and your creativity. Also, you have the third one. It's called the D'Ambalat system. This is a system of like managing risk, where the idea of balancing wins and losses. So with the D'Ambalat, to increase your bet with 1 unit, and after a loss you decrease it by 1 unit. Okay, increase your bet by 1 win or by 1 unit after a loss, and decrease it by 1 unit after a win. So the goal of this is to gradually recoup your losses. So as you have heard, every time like you win, when you win you decrease it, but when you lose you increase it. So this is like a hybrid of the martingale and the parole system. So you have to be creative. You see, you can use this one, you can use the hybrid, you combine them. Me, I have others, but if you are confused and don't know how to go about it, I'll also organize a way that you can have a one-on-one like coaching with me, where we'll cover a lot of data and we'll find something that works for you. We'll have a conversation. I'll know what will be like best for you. I'll try to figure out, and from my experience and from what I know, you can decide what works for you best. So this is the Ambalat. It's called the Ambalat, the Alambert. I don't know, these French names are quite like taxing to me, since I'm not a proficient English speaker. I'm not a native of English. So the thing is, you have that one, you can do that. So when you lose, you increase your bet by 1 unit. So when you lose, you increase maybe $1. Maybe you started with $1 until you win. But when you are winning consecutive wins, because you know there is a loss coming soon, because there is always, they are going to lose, you're going to meet a loss. So every time you win, you decrease maybe by half a dollar, or maybe another dollar, until you lose. Now when you lose, you start increasing. So you'll find that when you test this system, risk management systems, over a period of 1 year, you can see how much money you will have made or you have lost. So this is where backtesting comes for me. I don't backtest to see where the market would have gone. I told you we are not in the predicting business, we're in the risk business. Our task and our goal is to manage risk. We must, like, that's the only thing we can control, but the charts are out of our control. So that's something you need to be aware of. The third one, you have the Fibonacci system. So this is where you increase your bet, or start with the 1 unit. We all know the Fibonacci numbers. So there's a Fibonacci number sequence. Okay, so you can start with that. So after a win, you move back 2 steps in the sequence. You move back 2 steps, but after a loss, what is it say, you start with 1 unit bet and move up after each loss. Okay, you move up, but when you win, you return back. So that is another way you can use it. So this is a good one also. Like, you can let me like state the Fibonacci numbers so that people can understand it more what I'm saying here. But the main point here is you have to be creative with this like thing. This is why you have to be, your creativity has to come into play. But here, if you can't, just, you can even come up with your friends, just organize something, go have a discussion, test it out, brainstorm ideas and ways that you can manipulate this data to give you the output you want. And I've told you what you already have the probabilities chart. You can also have the chart, you can back test it and everything. So the sequence are 1, 2, 3, 5, 8 and 13. So every time you lose, maybe you start with 1 unit, you go to 2. The next you gamble with, you gamble, but you risk 2 units of your capital. So you must need to know the total. Then you know maybe the maximum or is like like this one, the 10% is 4. So you can have like 1, 2, 3, 4, 8, or maybe increase it according to what you think it's best for you. So you have to be creative. So once you lose, like when you lose the 2, you go to 3. When you lose the 3, you enter now 5. But after you win, you return back to 1. So that is the Fibonacci system. Then we have the James Bond system. So this one is a bit more complicated, but this one you place like bets in 3 areas. So like this one is best for the roulette, but I know what they are saying, like it's an alternative, but I don't know how to use this one. I've never used it, but for me, I can suggest, try it out, the Fibonacci. It's about playing about with the numbers, how much you are risking, the total amount of risking, and the units, and how they are going. They must be in sync with your system and your expectations, what you want to make in the markets. So that is something that I think nobody talks about. That you usually hear people talk about risking 1%. Some people even don't know how much they risk, but I suggest you use these ones. So me, I have personalized ones, like because they work for me. They may not work for you, but I have mine that are personalized. But in case you have any challenge and you like want me to help you in the creation of that whole process, just like I'll, in the link of this video, I'll leave a way we can like organize, of which I'm not going to like do it for free. That is something that is going to help you make thousands of dollars or millions. That's intellectual property. I cannot be like helping you while I gain nothing out of it. So because what I'm doing now, most of you even are not aware of such things, that there are people who trade like this is so unconventional. Not many people are talking about it, but yeah. So we have the martingale paroli system, Fibonacci system, and the other one was the D'Ambala. This is like the hybrid of the martingale and the, like, you know. So you have to have a way to play around, because bet on the consecutive wins or you are betting on the consecutive losses. Okay, so that is something you need to be like aware of, yeah, in the risk, because risk is the only thing we can control. So you have to be creative. You can decide, maybe you are risking $1 to exit at, to gain like 15 cents. Okay, so we are also, I'm going also to talk about, like, the next video is about consistency. So I'll talk about something, I'm sure you watch that one too, because it's tied to this one. Because if you don't watch that one and you go to try it out, it's going to backfire, because you don't know what I won't tell you. There's something I have a lot of experience in this market. I've gotten 9 payouts and I have a lot like experience with the financial market, so I know a lot of things. But yeah, so when it comes to like this one, there is that. Now you have the risk side, we don't do with the technical side. That's why this whole series, it's about idealization and concepts that I want you to understand. We are not dealing with the charts. You don't even need to study the charts, you just need to know breakouts, where to enter, where to place stop loss, and how to exit. And now you have seen how we form exits based on the probabilities. Now we are going to also, like, you know, now create your own risk system. Okay, so you can have modified numbers. You can find, like, you know, it's about you and being creative with the numbers. Maybe you are exiting with, you're risking $1 to get out 10 cents. Let me give you an example of mine. You know, it's 4. Okay, so what you can do, you can start with $1. The next one, you risk, like, you know, $10. So when you risk, like, not 10 but maybe, yeah, let's say 10. So when you get that, then you recover the $1 that you have lost. After that, if you lose that one, you take the numbers. Okay, so me, I have various ways. So you can, you know, 4 units, so you can do, like, you know, you increase the stake by 10%. So now you risk $100. Okay, this $100 you'll get $10 and recover your losses. So I don't want to say everything, but then you have the last one, which is the fourth, which you have seen that there are no chances of having 4 consecutive losses. It's close to 0. So you can have now $1,000. So you have a trading account of like $1,111. Okay, that's total. But now your account will not be $1,111. You're going to have like capital management that we talked about. So you're going to like have like $3,333. Okay, so at the end of, maybe, you know, in 3 months, depending on the amount of trades you take, you're going to have double this $1,111. You can now do something which is called rebalancing, which I talked about in the number, I think it was in probabilities, but I'll also talk about it later. But yeah, you can now rebalance it. Okay, so that is something you need to talk about, because you are guaranteed the chances of you not blowing, and also, like, you know, you have backup. So there's no psychological pressure of you like being so naive, or not naive but impatient, and executing like any setup you see. We don't even execute setups, but seeing fake outs that are not there, or me forcing our trades, or connecting with your conventional knowledge on why you knew about order blocks, I don't know, fair value gaps, trend lines. You know, shout out to ICT, because he taught different topics on that. But yeah.